Hi, Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Monday, the 3rd of March, 2025. Well, what an exciting time this is, and what a rough time it is. It's both things at the same time. Let's go first and take a look at what's going on for tomorrow and normal things. Red Book Group's going to update their weekly U.S. retail sales data. That comes in at 7:55. The American Petroleum Institute will release their weekly member stockpile data, and that's going to come in at 3:30. Then tariffs tomorrow. Now, the president came out today, and it was very clear that the tariffs are going on tomorrow. He signed the presidential order, according to TV reports, on China. Hadn't done it, and we're at 6:10 at night. I don't know if he's done it since that time. I haven't seen anything on Mexico and Canada, but he said they are getting their 25% tariffs, and Canada, of course, will get the 10% tariffs on the energy. Both countries have said they would retaliate. They want to see what the tariffs are, and from there they go. The president's going to address the joint session of Congress tomorrow night. That'll be about 8 p.m. Central Time. On Wednesday, we get China coming out with their parliamentary conclave, and this is where they're going to tell us what they're going to do. They're going to tell us if they're going from 3% debt to GDP to 4%, where the money's going to go, how they're going to raise money in order to salvage the real estate market. There's just so much that we're going to start learning right away. And Europe did set up the coalition of the willing, as they call it, to deal with President Trump, to deal with the situation of Ukraine and see what they can do. All that keeps happening, unfortunately for everyone, is Zelensky doesn't know how to shut his mouth. And what he has to learn to do is either speak the English language better or say nothing or say it in Ukraine. All right? One of the things, because the translations keep coming out where the war is going to keep going on and this and that. Why is he even doing that? Stay away. You've got a coalition. Let them do the talking for you. Your people are behind you. You're dealing with a difficult situation. Let's get it to a bargaining table. And what you keep doing is you're putting away the big boy, Trump. Now, I did like very much that Trump was clear today that he expects a mineral deal with Ukraine. Therefore, the great news is that as much as you'll hear the talk, they don't get along. In order for us to get those minerals, there's got to be a deal of some type, and that involves peace down the road. Once we have the rights, we're not giving them up to Russia. So different things going on, and unfortunately, we have a gentleman in Zelensky that at first I was sticking up for him. Now I'm just telling him, learn to be quiet. It's really important. End of discussion. I've been there myself, and I know it. All right. Now, here's the most difficult thing. We don't know how we're going to see reactions tomorrow. You're going to wake up 12:01 p.m., and in theory, Eastern time, the tariffs are going on. I don't know at 12:05 if Canada's tariffs go on us, and at 12:10, I'm just making these times up, Mexico goes at us. What I do know is the fact that the order was signed that at 12:01, China's tariffs go on, and whatever they do, they'll do. Basically, when the president said today, he told the American farmer, and I write about it in my news report, that farmers have to learn to deal in America. It means he expects China to stop buying our goods. So what does this all have to do with the metal markets? A real lot. All right. The question is, do you want to own the gold as the hedge for this, or is the gold seeing that part, giving you this crazy action of $40 swings every day, and is it trending? Why don't we go to it and take a look? On the gold market, and I'll cover the other markets when we get to the financial update right after this. You came down, as you know, back here at the end of 2024. You were playing at the 18-week average, and you soared from there. The market came down last week, and for this week, it's up almost 2%. Remember, it's the first day in early 1 hour of trade tonight, and you're up $54 for the week. When you take a look at the chart action, in looking back at it, this formed a top of sorts. You see that. The market pattern is one of lower highs, lower lows. The swing line high is now right here. When we take a look at where the market fought a battle for a few days last week, it was at the 18-day average of closes, and I can show you that. Remember, I know I was out of town and not here with you, but if you take a look at this, when the market broke down, it came back to the 18-day average of closes, got under it for a bit, dropped hard. Here's a $47 drop. Here's a rally that you just got today of $52. I mean, this is pretty crazy stuff. And I would expect to see resistance. Yes, resistance at 29.20, and the key is to get over this high right back there. When we take a look at why did the market bottom the other day, you look at the lower Bollinger Band. Where do you see that market? Let me take you to it. All right. Here you are with the market the day before coming down. If it's going to have the resistance at the 18-day average, which is the red line of closes, and break down, I don't know if it will, but if it does, my target would be the first challenge of the lower Bollinger Band wherever it comes in. Now, on the close of business on Thursday, that number was 28.57. When we go to Friday, you go right on down to 28.48. If you rally from here, the resistance should be the 29.18 level. Where would the stop have to be? In my opinion, the stop has to be right over this high of 29.42. Now, that's a big risk on a full-size contract to sell that market there. It's over $2,000 a contract. Maybe you trade small contracts, maybe you don't trade at all. Let's take a look at the next chart. In momentum, you had gotten oversold the other day. So when you came down to the lower Bollinger Band, do you disagree that the market was in oversold territory? If you do, it doesn't make sense to me. You had readings under 30. You were approaching the 20 level. That's the oversold level. I teach clients, number one, on the first challenge of a Bollinger Band, upside or downside. If it's not embedded, you're taking all your money off the table. If it embeds, you're taking money off, you're buying back on breaks until you lose the embedded reading, and then you're coming out. So there's ways to keep coming in. I teach it in my charting course. So as I look at the market down here and I see all of a sudden we're getting the bounce, I understand where the resistance is, and I'm going to call that in a downtrend. The gold is still stronger than the silver, and the higher the numbers go, the more ounces of gold, the more ounces of silver you need to get 1 ounce of gold. So as long as you stay over the 18-day average, I have a bullish bias to the gold market, not the silver market. Talking about silver, here's the May contract. And the market, prior to my leaving, was right here. Remember, I was gone for 4 days last week. And that was the Bollinger Band. And I remember saying to people, I think the pros came out. Well, as it turns out, you did fall lower to the 200-day average, and you've rallied right back. You're still very oversold. I do not think the pros are going to try to sell the rally in this market up at the 18-day average because of the oversold condition in part. In the May copper, you have a pattern of a higher high and lower low. My advice would be you stay away from copper. And you'll say, why? And I'm going to say because of China's conclave. The parliamentary conclave that's going to happen now, very important. Is it going to be the spur for copper? Who's the largest consumer of copper when their economy is moving along? China. What could happen in copper, and we know it, is these tariffs can move on through where the U.S. consumes and takes in about 45% of its copper needs for homes, automobiles, and all from basically our two largest, number 2 and 3 supplier of it. Numbers 2 and 3 are Mexico and Canada. They can easily hit you with tariffs. So there's lots of metal that has been coming into the market. Copper isn't yet been announced to be one of those that I'm aware of. I don't know what Trump's tariff tonight is going to include on everything. I'll find out the facts when the facts come out. Everything changes. I trust nothing. In theory, it's silver and aluminum, but he's expanded that. We'll see what it goes on with. In the platinum market, the trend is down. When you look here, you're flirting with losing the embedded reading. Now, let me just show you. Here's the close today. Let me come back one more day, in fact. I want to get to Monday. The close on Monday, you had a 16 reading. See that? And the red, that's the red in 1265. Now you're flirting with a 2091 reading. All right. So the sale zone could be the 100-day average, but if the number's over 21, I teach clients you don't play that game. Don't play that, oh, it's going up and then it'll come and re-embed again, which it is. I would stay away from that completely. Doesn't mean I'm right in my analysis, but I don't think in momentum-wise the traders are going to play that tomorrow. In the dollar index, a confusing market. Keeps coming back to the 100-day average. It's been doing it over and over, finding its support and getting a bounce. I heard so many today analysts give reasons to be bullish the dollar and others to be bearish the dollar here. It's one after the other. As an analyst myself, and I think I'm okay at being that, I don't see a pattern. This low right here with the arrow is under that low. This high is higher than that high. That's not a trend. The market lost the bearish embedded reading right back here, and I'll show you this. The objective when it did so, here it is, would be to come right on up to the 18-day average from that number. That's the closest moving average. It did it the same day that it lost it, and now it's just floundering. I'll let somebody else want to be a hero with that. So what am I saying in essence? I'm saying that I think that the big money boys might probe the short side of the gold, risking that $22 we were talking about. I'm talking that I'm going to be writing about this all tomorrow and through Wednesday, obviously, as the president gives his speech, the talk, the analysis that's going to come from it. It's a wild time. You've got to learn at times to put your hands in your pocket, and that's what you get paid for advice for. And you say, maybe I don't need to be a hero in this type of market, because how do you control the emotional swing off of all that's going on? Do you know if tariffs are going to come from other countries overnight? Do you know what they'll be? This is like going through a big Fed meeting where you don't know if they're going to do one thing or the other. And no matter what you do, you can't move quicker than the market. That's where you're at for a short period of time. So if you want to get our opinions on this, you go to iraepstein.com, free offers, or move your cursor to the top here. Another way to do it, you can give us a call. I'm Ira. You have a good evening, and I'll give you a lot more detail as we get to the financial market.